Okay. Everyone ready? Yes? Good? Perfect. So this is the budget setting tool. And as you can see, there are 5 main tabs along the bottom. The main tab that you need to stay focused on is the intake sheet, which will be the first tab. Up here, you're just gonna go through it as normally as you possibly can. So go ahead and fill in your name. Got another participant in here. There we go. Go ahead and fill in your spouse's name if you have one. I'm just gonna keep it as if I'm single right now. And you're just gonna go in and put in your income information right here. So if you get paid an hourly rate by however many hours you work that week, or every week I should say, it'll automatically calculate your income at the bottom. If instead you get paid an annual salary, you just put that there and it'll calculate it down here. Another way that you can look at this is if you have a spouse and they get paid an hourly rate or salary, it'll just calculate it for the entire household at the bottom here. Okay. So moving on, you're going to take a look at the tax information portion, and you're just going to put an X next to whatever situation pertains to you. So if you're single, married filing jointly, married filing separately, whatever your situation is, go ahead and put an X next to it. For this example, I'm just going to put an X next to single. And then down here, it asks you what your monthly estimated taxes are versus your monthly taxes paid. So the really cool thing about the sheet is that if you go to the taxes tab at the bottom, it'll automatically highlight which of the 4 main tax scenarios pertains to your situation. And what you can do is then figure out right here what your monthly taxes would be based off of the income that you put on the intake sheet. Now, this is just an estimation. This is not tax gospel by any means. I'm not a tax expert, but it's a great way for you to figure out on average how much money you can expect to be coming into your pocket versus what your paycheck shows as your gross amount. So you just put that number there and it'll calculate it right here. The reason why that there's an extra portion here is if you live in a state that has state income taxes, you're going to want to go ahead and put that information in that part as well. So that way you're not forgetting a significant part of your income that might not be coming to you. Moving on, the next main portion is the living expenses information. So here you're going to put all of the living expenses that pertains to you. So say you have a mortgage, but you also rent. I'm going to pick 5 for now. And you're going to put the monthly payment amount into each of these. And then we're going to scroll down and go to the debt information. So you notice that I didn't put any of my car loans, student loans, credit card bills, any type of debt payment that's not necessarily a living expense in the living expense portion. And the reason why is because they're treated differently when it comes to your budget. If you want more information on that, I have 2 or 3 great videos explaining the difference between living expenses and debts, and a really great video coming out in, I believe, 2 weeks that goes based off of debt payoffs and how to expedite that. So those are found on my YouTube channel. But just to give you some main information right now, let me add that person in. You're going to put all of your debt information here. So I'm just going to pick a few. Go ahead and fill this out while I'm filling mine out. So that way, if you come across any questions, you can ask me right away. oftentimes when I sit down with a new client, I notice that they don't have the total amount outstanding or the interest rate or the monthly due date, even sometimes the monthly payment amount memorized, or they don't recall it off the top of their head. That's okay. Fill in what you can remember right now. Fill in what you think everything is in terms of the total amount outstanding, the monthly payment, and the monthly due date. But after this webinar, go back and check. So that way you can make sure that your budget is as accurate as possible. So I'm going to go ahead and put in some numbers here just so you can see why having it accurate actually is really beneficial on the sheet. So go ahead and fill in your information in the meantime. Moving on. So up until this point, the income, the taxes, the living expenses, and the debt payments, those four main pieces are what I consider to be the bulk of your budget. And the reason why I say that is because it's really the money that you either have to rely on to live, so your income, or you have to pay whether or not you have an income coming in. So from here on out on the rest of this budget sheet on the intake sheet tab, the pieces of information that we're going to be putting in here are what's considered the extras. So the money that you would use in your discretionary income, how you would allocate that to make sure that you are not overspending, to make sure that you put a cap on your spending. And really, this is where you can make or break your budget, which is why it's still just as important as the bulk of the budget. So the first category of the extras is the donation and gift information. So this is for you to place if you actually like to do any charitable donations, university donations, if you are someone that absolutely loves giving birthday gifts or throwing birthday parties, you want to make sure that you can save for those things so that way you can actually still enjoy doing it, but you don't go into debt doing those things. So I'm just going to pick a few right here. I'm just going to say birthday gifts and birthday parties. Now, notice that I am not putting any dollar amount associated with these just yet. That's because on the next tab that I'm going to show you, I'm going to give you an example of how you can allocate your discretionary income across all of your extras. But we need to see all of them in one place so that way it makes sense and you're not allocating more than what you have. So donation and gift information, pretty straightforward. Other expenses. Now, I don't know about you, but the first two on the examples, dining out and entertainment, are probably my kryptonite. I've noticed that there's been a significant decrease in this spending over the past couple weeks due to the coronavirus, at least personally. But it's always something that my husband and I sit down with and we review to make sure that we are spending within our means each month. So other expenses, again, just list what you like to spend, and we'll allocate the actual dollar amount on the next tab. I'll add one more too. Okay. All right. So we talked about the bulk of the budget, we talked about the extras, and now within the realm of extras, we have goals. Okay, so these are anything from saving for retirement, saving for an emergency fund, planning out a huge vacation, any large purchases that you need or want coming up. These are where you need to leverage a larger bulk of your money, but it's not necessarily money that you have on hand right away. So you need to save for it. How do you save for it? Planning to save for it. And that's what we're going to do in the next part right here. So first part, emergency fund. Taking it back a little bit and to be a little bit more serious of a moment, a lot of people are getting laid off during coronavirus. And luckily, a good portion of the friends that I have that have gotten laid off have an emergency fund set up for this purpose. So what is an emergency fund? If you don't know, it's basically a savings bucket where you put a little bit of money in until you accumulate enough to cover 3 to 9 months worth of your expenses. 9 months being really on the conservative side. You really want to make sure you have enough to cover your expenses. 3 months being, you want something saved, but you don't see a use of having 9 months worth saved. So the point of an emergency fund is to make sure that if you lose your job, if someone in your family gets injured, something in your life situation happens to where you're no longer bringing in the same amount of income, or your expenses are significantly higher, you can still sustain yourself for a certain period of time. So 3 to 9 months, figure out where you are on the spectrum of either being really conservative or you just want something saved but not too much, and put that number here. Personally, I like about 5 months worth, so I'm going to put the 5. And this number right here is automatically calculated based off of the living expenses and debt payment information that you filled up at the top of the sheet. So it takes all of those monthly payment amounts and multiplies it by 5, so that way I have 5 months worth of savings. So just to give you an example, if I change it to 3, it's going to go down. If I want to be uber conservative, put it to 9, it goes significantly up. Just for this example, I'm going to leave it at 5. I know that emergency funds can be a pretty hefty and overwhelming topic sometimes. So if you want more information on that, let me know. I can send you a link to a video that I created all about emergency funds. So that way you can figure out a little bit more answers to your questions. And if you still have more questions, I'm more than willing to help you out with those. All right, enough with the serious talk. We're going to move on to something that is exciting and fun, vacations. So I love traveling. I like going on expensive vacations. I'm not going to sugarcoat it. And unless I save for them, I'm not able to enjoy them personally. I don't like going on a vacation and then coming back and trying to figure out how to pay for it afterwards. That's not relaxing to me. So what I normally do is I have a list of about 4 or 5 places that I would like to go visit, and I set a dollar amount that I think it will cost me to go, including flights, hotels. I estimate food. I'm a little crazy, I know. But I take all of this and then I'm able to allocate a monthly amount that I'm going to be setting aside and saving for that vacation. And then that helps me figure out either if I start with the dollar amount that I'm saving, when I can go on the vacation, or if I have a specific date for the vacation, it lets me know how much I need to save each month to go on it beforehand. So let's just pick something that is typical. Let's just say New York. And let's say to go to New York for a few days costs $2,000 and we want to go at the end of the year. So I would put that in and I'll show you how to save for that in just a little bit. But I'm excited to show you this. This is probably one of my favorite parts of the budget. Retirement. So this is a huge topic. I'm not going to dive too much into this because I have 2 videos on retirement alone with 3 other ones planned with experts. So in general, what you want to do is think of a number that you want to have saved for retirement. If you have no idea where to start, that's fine. Let me know. I'll send you the videos because they're pretty in depth and I don't want to take up too much time here today going over that. So for now, I'm just going to say around $1 million. And let's see, let's say in 2065, the year 2065. Okay. Other goals. So we talked about planning for emergency funds, planning for vacations, planning for retirement. Other goals. let's just say buying a new car, and you know that the car is going to cost $35,000, but you want to put down, let's just say $8,000 and get a loan for the remainder. You're going to put $8,000 here and say you need that car a year from now. Let's just say April 1st of 2021. Okay, so at this point, your intake sheet should be completely, if not mostly, filled out. I understand that everyone has their strengths and weaknesses, so if you are getting caught up on any particular part, don't stress it. We can talk about it after the webinar. But just make sure you have a bulk of the information in here so that way you can see how the rest of the tool is affected by the information that you put on the first sheet. So the first place we're going to look is the budget template. So this is where you can see how your standard budget is set. So I talk a lot about referencing your standard, setting a standard, and making sure that your standard is good and sound. That's what this is. So on the budget template tab, it takes all the information that you've put on the intake sheet and it makes it in a way that you can see it and reference back to it each month. As you can see, I didn't do the math in advance and I definitely did not allocate enough income. I just put a random number in there. So let's just increase this for example purposes. There we go. Okay. So what this basically states is that each month on average, you can expect to have about $4,100 to $4,200 of income before taxes. Taxes are about $335. Your net income, so money that you can expect to actually receive in your pocket, is about $3,800. As you can see, I have all of the living expenses that I placed on the first sheet. I only chose 5, but those, as well as the debt payments, make up a total of $3,100. Okay? So the net income minus the total expenses, gets you $686 in discretionary income. So if you remember, this on the left-hand side is the bulk of the budget, okay? The discretionary income is the extras. So that's how we can allocate the remainder of your income across the board of the rest of your budget. So for birthday gifts, I have $686. I don't want to put all $686 in one basket. So I'm just going to say $25 a month for birthday gifts. Ooh, 25. And let's just say $25 a month for birthday parties, knowing that I'm not going to either get a birthday gift every month or get a birthday party every month. But I know that if I can set that aside, I can save it for the next month and I'll have $50 to spend rather than $25 to spend. Dining out, be honest with yourself, people. If you know that you like to dine out and you are only going to allocate $5 of your budget to dine out, that's not realistic. Be realistic, but also be disciplined. So if I normally spend $200 a month on dining out, I'm going to take baby steps and say, okay, I'll go out to eat one fewer time, and that's $150, right? And work towards the number that you actually want to get to. Maybe it's $50, but see how you can manage the first couple months, and then you can readjust your budget as you go on. Entertainment, I like to go out to watch a movie every now and then. Hair care, I get my hair cut maybe once every 2 months. It's probably like $15 if I save it. Emergency fund. So now we're getting into some of the more important aspects of allocating your discretionary income. So as you can see, I had $686 to start. I have left $446 left. So I really want to save for this. So I'm just going to say $150 for now. And if I have money left over, I'll go back and update that. Going to New York. So if I'm going to New York in the end of the year, it's 2,000 divided by 9 months. That means I have to save $225 each month. So as you can see, I'm left with $71 left. Okay, I'm gonna start saving $15 and what's the remainder? $55. Okay. Okay, so as you can see, I've pretty much allocated my entire budget across the bulk and the extras, including the goals that I have. You now understand the intake sheet and the budget template tab. We're gonna move on to the debt tab. Now, as I mentioned earlier, you wanna make sure that the total amount outstanding and the monthly payment on the intake sheet, I'll reference that right now so you can visualize what I'm talking about, this part right here. You wanna make sure that this is as accurate as possible. So pull up your debt statements, pull up your credit card statements, call someone if you have to, but figure out what your total amount outstanding is and your accurate monthly payment is. Because here, this is going to show you how many months you have left until you pay off that debt in full if you keep on making the minimum amount. 67 months, 175 months, and 100 months is very overwhelming, and it can make a lot of people feel anxious. So I don't like that, which is why I've actually created a debt payoff video that's going to be coming out in 2 weeks. I referenced that earlier this video, but it's going to actually show you how you can expedite your debt payoff using a method called debt stacking. This method works. I've proven it. It's actually how my husband and I have become completely debt-free except for our mortgage. I have helped a few other of my clients get to this point as well, and I'm in the process of helping a few others at this point in time. So it is possible. I just think that visualizing it helps it seem more real. Then lastly, the assets and goals. So over here, you can see the vacation goal. Let's just say I already have $250 saved in my savings account for it. You'll see that the total amount of months left until I can actually afford to go on this vacation goes down. If I increase my monthly savings for that in the budget template tab down here, let's just say, well, I've already allocated my budget, but you'll see that this number will go down. So as you save and as that number increases, so say 3 months from now, you got a bonus check and you wanted to put all of it in there, you'll then only have 4.5 months left until you can afford to go on that vacation. And you know that you're on the right track to being able to afford that vacation in advance so you can actually go and enjoy yourself. Retirement savings, again, same thing. Say you've been working at the same company for a few years and they've been putting money in your 401k. This will tell you exactly how many more months and years. Again, years, I only allocated, I think, $15 a month on this just as an example. But it helps you visualize and see it in a tangible setting. So that way you know where you are performing well and where you need to improve upon in your budget. The biggest difficulty that I see with my clients is that they just don't know where to start. And writing it all down and having it all in one place is a great place to start, because then you know where to go back to reference your answers. You have the standard budget already set up, so that way when you sit down every month and review it, you can make sure that you're maintaining your budget in a well-performed setting. So I am going to stop sharing my screen and I'm going to open it up for questions.
I have more of like, not a question, but like more of a praise. Like I started with Amelia back when we first started doing it. So my template's a little different. I got the OG template.
You do have the OG template.
Worked for me, and we've had to tweak it. Like she said, with groceries, like you start out with a number, and like, yeah, I have 3 kids. Mine drastically changed from what I started to now. So it definitely works if I could advocate for that. And it actually makes, I actually want to look at it, see what I'm saving, see what I'm paying off. And it makes me want to actually do it. It's kind of like a game now. And it's very encouraging seeing these things. So I know it works firsthand, and it's enjoyable. I don't stress anymore.
That's good.
I do have that at least, then more than question. So
that's awesome. Well, thank you for sharing. Yes, Amanda does have the OG template. She was one of my beta testers of Mills Knows Bills as a whole. So she saw the template that I use on my day-to-day basis with my husband. So if you're interested in seeing what that looks like and how you could use that for yourself, reach out to me. I have no problem sharing my ugly template with everybody.
I think that the newer one is definitely finally tweaked.
It is. It's a lot prettier, and it's a lot more user-friendly. Yes, Robin, you have a question?
Oh, Robin's muted.
I'm unmuted now. I got one question.
Yes.
I'd like to go on vacation. I noticed your demonstration about getting 4 months out in advance and stuff. Do you recommend in general, if you know you go on vacation a couple times a year, or are you trying to plan a certain amount of time ahead? Or if you know you're going to want to do at least 1 or 2 big trips a year, how do you budget that within, but you still want to be spontaneous? And I think our culture is very about being in the moment, being spontaneous.
It's all last minute.
What does that look like?
So if you know that you want to go on vacations, but you don't necessarily know what that looks like, you know, in terms of location or how much it will cost you, maybe figure out a vacation that you might want to go on and a time that you might want to go on it. So that way you can get into the habit of saving monthly for a vacation, whether you take that particular one or not, and just keep saving and putting it into a separate bank account. I have an entire bank account, a savings account meant for vacations. And I can't tell you how many times I've gone on a spontaneous trip. And before I've gone on it, I just looked at my savings account and I said, okay, I have the money to cover it. I'll go on the trip. And if I didn't have the money to go on it, I would wait 1 more month or 2 more months until I could actually afford to go on that vacation. So that's a great question. If you want to do that spontaneous vacation, I would say maybe make vacation savings a static part of your monthly budget. So that way you can just continue populating that. And, you know, maybe at one point you have enough money to go to Bora Bora, or maybe you just want to go to New York 12 different times. You know, you have that money set aside.
Mickey Mills.
No problem. Any other questions? Yes, Dominique?
I have a question.
Yes, ma'am.
So if I'm saving in an account, but I'm splitting it up into 3 different accounts, how can I know like how much money to allocate to each account?
So
like leftover money.
Okay, so let me get this straight. You have, let's just say you're saving for a car and you're saving for a trip to New York, and you're putting both of those savings into the same bank account?
Yeah, should I put it into a separate bank account, or should I keep it in that one bank account?
I think that depends on your bank, right? So if you have a bank that will allow you to open up multiple accounts without having fees or required minimums or anything like that, I would say go for it. Open as many accounts as you want. I mean, I think I have 6 or 7 just because it keeps me sane personally. But if you don't have that luxury to avoid a minimum fee or a monthly maintenance fee with your bank, I would highly suggest keeping track of it on your budget sheet. You can create an additional tab, and each month you can just put the total amount that you saved for that particular, you know, vacation or that car loan. And that way, you know, say you put $250 for the vacation in January and $250 for the car in January, and your bank account says $500, you know, by referencing the sheet and your bank account total, what the $250 is meant for each. Does that make sense?
It definitely does make sense. Thank you, Mills.
You're welcome. Any other questions?
awesome.
Well, thank you all for being here. If you need me, you know how to reach me, and I will see you all next week.